Welcome back to the channel, everyone. This week, we're diving headfirst into the wild world of crypto. From Washington, D.C. to the decentralized web, we've got a lot to cover. We'll be looking at the ongoing battle to get a spot Ether ETF approved in the US, the groundbreaking cross-chain technology shaking up DeFi, and the global regulatory landscape that's shaping the future of cryptocurrency. Buckle up, it's going to be a fascinating ride. Our first stop takes us to Capitol Hill, where a bipartisan group of lawmakers is putting pressure on the Securities and Exchange Commission to approve a spot Ether ETF. This isn't just about arcane financial regulations. It could be a game-changer for everyday investors. A spot ETF would allow people to invest in Ethereum directly through traditional brokerage accounts, potentially opening up the market to millions. Of course, the SEC has its concerns, but the growing pressure from Congress suggests that change may be on the horizon. Now, let's shift gears from the world of regulation to the cutting edge of blockchain technology. The HeyQQ network just got a serious upgrade with the integration of EVMOS. For those who don't speak blockchain, EVMOS essentially acts as a bridge, allowing the HeyQQ network to interact seamlessly with other blockchains like Ethereum. This is a big deal for DeFi, as it opens up a whole new world of possibilities for developers and users alike. Imagine being able to move your assets and interact with different DeFi protocols, all without the headache of centralized exchanges. That's the promise of cross-chain compatibility, and EVMOS is putting it into practice. So, we've talked about the US grappling with the idea of a spot ETF, but halfway across the world, Hong Kong's taking a different approach. They're not just welcoming Ethereum ETFs. They're adding a twist. Imagine an ETF, but with the potential for staking rewards baked in. That's what's on the table in Hong Kong. It's a bold move, potentially making these ETFs more attractive to investors because who doesn't like a little extra on top? But, and this is crucial, it's also a regulatory tightrope walk. How do you balance the complexities of staking with the need for investor protection? That's the question Hong Kong's figuring out, and the outcome could have ripple effects far beyond their borders. Let's shift gears from the world of finance to the underlying tech. Specifically, Solana and its burgeoning DePIN ecosystem. DePIN stands for Decentralized Physical Infrastructure Networks. Think of it as the real-world application of blockchain technology. We're talking about projects using Solana to revolutionize everything from wireless networks and data storage to energy grids. Take Helium, for example, a DePIN project using blockchain to create a decentralized wireless network. It's a fascinating space, because it tackles real-world problems with a decentralized ethos. But it's also very early days. Can DePIN projects on Solana truly disrupt established industries? Will they be able to scale and deliver on their promises? Only time will tell, but it's a story worth watching closely. Now, shifting our focus from regulatory landscapes painted with progressive strokes to those clouded with uncertainty, we arrive at Binance's ongoing legal difficulties in Nigeria. In August 2023, news broke of a lawsuit filed against Binance by Nigerian investors. They allege that the platform's operational suspension in the country during a period of significant market volatility resulted in substantial financial losses. Binance, for its part, has refuted these claims, stating that its actions were motivated by a commitment to regulatory compliance and user protection. However, this legal battle shines a light on the complexities of operating within diverse regulatory environments, particularly in regions where clear guidelines for cryptocurrencies are still evolving. The outcome of this case could have significant ramifications, not just for Binance's presence in Nigeria, but also for how other exchanges navigate similar challenges in emerging markets. It underscores the importance of regulatory clarity and consistent communication between platforms and users, especially in volatile market conditions. The legal battle in Nigeria has sparked a wider conversation about the country's approach to cryptocurrency regulation. Binance CEO, Changpeng Zhao, commonly known as CEP3, has been publicly critical of the Nigerian Securities and Exchange Commission's (SEC) handling of the situation. He argues that the lack of clear guidelines and communication from the regulatory body has created an environment of uncertainty, ultimately hindering innovation and investment within the country's crypto space. CZ's statements highlight a growing tension between the fast-paced world of cryptocurrency and the more measured approach often taken by regulatory bodies. This tension is playing out on a global scale, with jurisdictions wrestling to strike a balance between fostering innovation and mitigating risks. The situation in Nigeria serves as a case study in the challenges and opportunities presented by this ongoing dialogue. Ultimately, finding common ground between regulators and industry players will be crucial for the responsible growth and adoption of cryptocurrencies worldwide. If you're as fascinated by the evolving world of crypto as I am, then head over for even more in-depth analysis, news updates, and thought-provoking discussions. And don't forget to like this video, subscribe to the channel, and hit that notification bell to stay ahead of the curve in the dynamic world of cryptocurrency.